What's up, everybody? I wanted to hop on here and do a video from a request. I got a few people asking me the indicators I use. So I was going to run through the few ones that I do use that I find value in and why I use them. So let's get started. This should be pretty short and sweet, so we'll just kind of cruise through them. So first one I use is this green line, and this is the 50-day simple moving average. And something I do that I don't think a lot of other people do is I leave this on the daily time frame. So what I mean by that is when I turn this on, I put in my 50 and time frame instead of chart, I do daily. So this means that this green line that I have here is always going to be on the daily time frame. So even if I go to like the 1 hour, this green line right here, this is still based on the daily time frame. And the reason I do that is because the 50-day simple moving average and the 200-day simple moving average tend to act as support and resistance for price. So I use them as dynamic support and resistance lines. So when price gets close to it, I know that there's a possibility to reject or bounce off of it. I can show that here on NQ. Right here at the peak, 12,187-ish area, we literally wicked right at the 50 and then fell all the way down. So you'll see that kind of over and over again. Price tends to respect the 50-day simple moving average, kind of like here. Got under it and then it held as dynamic resistance and then we fell. Then again here, we were above it, came down, tested it, wicked at it, and bounced. So to me, it works very well as a dynamic support and resistance line. But that is only if you keep it on the daily time frame. That's what I do. The next one is the 200-day simple moving average. Again, I keep it on the daily time frame. This is the red line I have, and I do that for the exact same thing. So lots of times price will come up and touch the 200-day simple moving average and bounce or reject off of it. So you can see here it held once, twice, 3 times, 4 times as resistance. Go back here. There's an area that it bounced at. Then we played some games around here and finally broke through it. But another reason to use it is just because it acts as dynamic support and resistance. So intraday, when I see us coming up to that line, I'm usually looking for a rejection or a bounce. The next one I use is VWAP. I think most people use it or they know what it is. I only set it to turn on for the seconds or the minutes. I don't care like on the hourly or like the 4 hour, or like the daily, if it shows or not, because this is more of an intraday indicator. So go to the 30-minute. This is my purple line. Again, I use this as dynamic support and resistance. Pretty simple. The next one is the 3-day highs and lows. This is an indicator by Orion 1, OIAREN 1. And what this does is it plots the previous 3 days high and low price. And it does this by doing different colors for each one. I got blue for the previous day, orange for 2 days ago, and red for 3 days ago. And what you want to do is turn on this price line, and then I set mine to the third largest just so I can see it, because when you do it on the smallest, it's a really fine line that's hard to see. So I do it on the third largest bold or third largest thickness, and then I can see it on my chart. And so you'll see on the chart, there's the dotted lines, red, orange, and blue. And these also tend to act as support and resistance. One of my favorite trades that I like to take is when the previous day high or low price gets close to it and starts breaking out of it. and it rejects and comes back into the range. So lots of people will get trapped on that. They'll think that, we're breaking the previous day high or previous day low and that we're going to keep running. And lots of times these breakouts actually turn into fake outs, and lots of traders get trapped in it. So that's one of my favorite trades to look for, is where, like this blue line will get broken, will come up a little bit, it looks like it's going, and then we start to wick at it and we come back into the range, and then I will end up taking that short or fading that move back into the range, and usually happens pretty quickly and is a nice little profit. So um, you can also turn off if you want to turn off like the last 2 days and just have the previous day, you can also do that. I like having them all on because price tends to respect, or at least kind of show a reaction at the previous high and low the last few days. So I keep it on there. There's also one other dotted line here that I use. This is the previous day close price, and to turn that on, you go to the little gear wheel, the chart settings, click this button right here, previous day close price line, change it to a color that you like, and that's it. That also acts as support and resistance. Next indicator is relative volume. This is by SSK Charts, and this is just a little box up top that shows the relative volume on the day. So you can go here. Relative volume length. This is the average that it's comparing the volume to. So if you want to do like the average of the last 5 days, you can do 5. I do 10 personally. Shouldn't really matter much, but it just gives you an idea of the volume on the day. So if you're at like a high volume day, you're going to be over 100%. If you're under, obviously, the moves probably aren't going to be as clean or as strong. So like Friday, we closed Friday at 81% relative volume. So that means that this volume bar right here is 81% of the average of these last 10. So it was pretty damn low. And we did have a really strong bar up, which this volume doesn't match the move we made. So definitely looking for, not really looking for a big follow through here because that was not a strong move. But this just tells you in real time as the bars are forming what the volume is on the day. So like you can see here versus the previous day, after the first hour, volume just totally fell off. Excuse me. So I think on Friday it was something like after this second 30-minute bar, I think we were at about 45% of the average daily volume, and then for the next like 3 hours, we'd only gained like 10 or 15% on the day. So literally volume was just not there. There were no moves, nothing like that. It was awful. This is something you want to see where, volume is really high, it picks up, the spread of the candles gets larger, and that's where you can make your money. You don't want to be trading the low volume days. So that's why I have that up there, just to kind of gauge the volume on the day, see what the moves are going to do, and if it's a high volume day, it's more likely to have a larger move. Next indicator is volume. These are just the regular volume bars down here. I don't do anything special with them. I keep them the same color. I don't even color code them to the chart because all I care about is relatively is it more volume or less volume than the previous volume bars. So like I'm looking for things like this where we have a big strong move up, volume's up, spreads up. That's a very strong candle. There's probably going to be some follow through and you can catch a piece of that. I don't use a moving average on my volume. I don't really care about that. Yeah, so that's pretty easy. And the last one I do is the VRVP. This is the visible range volume profile. And these are all the same. These are all the ones that I just talked about. So if you want to take like a screenshot or just kind of look at it, those are the ones I've gone over. But this last one is the visible range volume profile. This shows volume in terms of price. Typically, we're used to seeing volume in terms of time. So, if you're on like the 15-minute chart, you get the volume per 15-minute bar. This one up here gives you the volume per price level. And so what's good about that is it can show you the most significant prices that have been traded. So if the price has the most volume traded at it, that's a very strong area. So you'll see that basically the volume profile shows these nodes is what they call them. So these are volume nodes, and these are where the volume spikes on the volume profile. And these guys tend to act as supply and demand levels or support and resistance. And so these can also help validate your zones. So usually if there's a big volume spike or a volume node at a supply or demand zone, that's usually a really strong zone. So down here, this is the largest spike on the chart here, and that corresponds to this 3771 to 3750-ish zone. So I know that that zone is going to be very hard to break because that's where the most volume has been traded on this whole chart. Um, and so these zones or these nodes also tend to act as magnets for price. So usually if you push up over this node, you're going to want to target this next node because that's where price is going to want to go. Price wants to go to where the most volume gets traded at. So that's a very good tool to use. Probably one of my favorite indicators. And then the way that I have it set up, what am I doing? I have it set up to show that the value area is 100. I think the setting when you first get it, it's at 70. And what this does, it shows you, so it grays out or fades out the area that has the least 30% traded. So if you're on the 70%, this is where 70% of the volume was traded in this area. To me, I don't really care too much about that. I more so use it for looking at the nodes, but you can keep it there if you want. What else does it do? They also do value area up and down. So I think when you first get it, there's like blue and orange or something like this. It shows kind of like the buying versus the selling, I believe. I don't care about that. I just care about the nodes and the spikes. So I just make them all the same color. Makes it easier to see. And then you do have a point of control. And so this is a red line that I have. This is the red line right here. And all that shows you is the price line where the most volume was traded at on the chart. So it's the highest spike in volume of the volume profile. You can also do value area high, value area low. So this will show you the value area where the most 70% of volume is traded. One thing to note is price tends to bounce from value area to value area. So if you come down and test this value area and then you start to bounce, it's not a bad idea to target the high value area. Now this is probably more accurate and better on like from a day trading standpoint. But like Friday, you can see, from the open, came down, bounced, came up, touched the top. So that's another thing you can add or use if you want. Not a bad idea. And that's it. That's all I use. So most of the stuff has to do with volume because volume is obviously one of the most leading indicators. And you obviously need volume for large moves to happen. And then the other ones are literally just dynamic support and resistance or the previous day highs and lows. So it's just price levels, dynamic support and resistance, and volume. So even though it looks like a lot, it's really not too much. I'm trying to think anything else I use. I don't really use anything else. So yeah, I hope that helps you guys. Let me know if there's any questions. And we'll see you around. Thanks.